Yo, what up YouTube? It's your boy V. Please be sure to follow me on IG because in today's video, this is going to be a trade breakdown of a trade that made me around $1,200, something around that range. In today's video, I'm going to be giving you all a complete breakdown of how I like to take my trades from start to finish. First things first, I'm on ATAS right now, and basically this is the volume profile. Hopefully you're able to see this cursor right here, but basically this is the volume profile. This light blue right here is going to be our inside of value, and the dark blue is going to be our outside of value. If we look at the previous day right here from where this red box was, this is going to be our inside of value, and then out here is going to be the outside of value. I took a bad screenshot, but this is outside of value and this is inside of value. Now, when it comes down to our deviations, we know we got a small, medium, or large deviation. In this case today, this was a medium deviation, which means there's a chance that it can come back to the prior or previous day's value, or there's a chance that it can continue. Now, we've seen that it continued, so basically, whenever we're looking for continuations, we're looking for breaks and retests. Whenever we're looking for the market to come back, basically, we're looking to take the trades at the extreme ends of value. What does that mean, at the extreme ends? That basically means if we're looking to take a sell back into previous day's value, which is down here, we're going to look to take our sell up here at the value area high. If we're looking to take buys, let's say the previous day value was up, and we're looking to take it back into previous day's value, we're not just going to press buy so it's the market open. We're going to wait for the market to come down to our value area low, and then we're going to look to take a buy at the extreme end of the area. Once it touches the value area low, we're not just going to press buy. We're basically going to wait for some type of absorption, some type of rejection, then we're going to do it. We need to see confirmations for everything, okay? So that's the value area in a nutshell. Let's go to the overall structure of the market. The hour time frame looks terrible. There was consolidation. We're at all-time highs, so the hour time frame did not give me much. Let's go to the 30-minute time frame. This looks a bit cleaner. Yes, we are in consolidation, but we're able to see a bit more when it comes down to it. Zoom in a bit. So basically, I believe this is the 9:30 open. Has to be. Yep, 9:30 open. So as you can see, we have a gigantic rejection to the upside, but the market ended up closing bullish. We're already in the uptrend, so in my head, I'm like, okay, well, we're at a medium deviation, so it can either come back into previous day's value and then continue, or it can literally just bounce up and just keep going. So in my head, I'm thinking like, okay, let me just be a lot more patient today because we had a medium deviation. So let's go to the 15-minute time frame. 15-minute time frame, at the open we have an engulfing right here. The next candlestick we have a push down, but it's not really a rejection. On the smaller time frames it did look like it was a rejection, but we do have a candlestick that is pushing lower, and then the next candlestick pushed up. In my head, I'm thinking like, okay, well, we just got to the high, and we did break the high because on the smaller time frames we had a candlestick that closed above the previous wick, which is a confirmation that the market wants to go higher. Now, in that case, we put that into consideration, and we see that we get a break and retest. So in my head, I'm thinking like, okay, cool, we got us a break and retest. I could have entered down here. Let's look at a 3-minute time frame. I don't even got a picture of it. The candlestick just did not look good, and I did not enter down there, but that would have been the best trade to take, to be honest, because that's at basically one of the lower ends of value, basically close to the extreme end of value, and looking to take it to the value area high, which is going to be basically this. So this is the reason why I didn't take it, because like the value area low was literally right there, but we didn't tap it. So in my head, I'm thinking like, okay, I'm not going to take a trade right there for the market to end up breaking past this low, rejecting, and then pushing up. So that's why I didn't take that first trade. Now, when it comes down to this right here, so could have took this trade as well, didn't take this trade, was looking for something a bit more solid, so I ended up taking this trade right here. And the reason I took this trade is because, don't mind this red box right here, just focus on the green one. We see this red line right here is going to be at the POC. We don't take trades at the POC. This blue line, I normally change that to the value area high. I just didn't move it at the time because I was taking a trade. But basically, you know, we're taking a trade at the extreme end of value, but we got a break and retest. What did we break and retest? Not only did we break and retest the high of the all time, but this is where the market got very, very aggressive. So as you can see, we have 35, 108, 22, 59, 168, 26. Those are buyers that are trying to push the market up, but that's not a lot compared to 257, 310, 225, 301, 468, 521, 344. Once I seen all these aggressive buyers come into the market, basically what I did is I put a green box basically where all the buyers got aggressive, and I was looking for the market to basically break through, show some initiation, and then come back for the break and retest. Now, once we got the breakthrough on this candlestick right here, we got a rejection, the market comes back. In my head at the time, because this candlestick was literally like very bearish, and I thought it was just going to like, since we're at the extreme, I'm thinking it's going to just sell back and go all the way back down to value. But once I seen this red bubble, which is an aggressive participant for the sellers, once I seen them come in, and then the market literally just didn't have any, there was no initiation with the sellers to push the market lower, and then the market ended up closing bullish, this is a sign of absorption. Whenever you have a aggressive participant, a big seller, and the market ends up closing bullish, that is a sign of absorption. Where is this absorption? This absorption is where the buyers got aggressive. This absorption is where the buyers push through the market and they're coming back down. That's two indications that the market wants to continue. We have another form of absorption right here. Basically, we have a bullish candlestick, but we have aggressive sellers towards the bottom. The sellers did not get rewarded, so basically that's another sign to enter. I entered on this first one because, you know, like, this is absorption. We're looking at the area we're in. Let's look at the buys. We're at all-time highs. Maybe a little bit tough, but this is what I like to see. So this is what I'm going to enter on. I'm not going to put good money behind bad risks, and I felt this is good risk, so I entered right there. 5-minute time frame. This had a 5-minute look. Pretty clean. Not gonna lie. Pretty clean. Back to my free course. Check out the free course. In my candlestick section, I mentioned how if a candlestick, for example, this candlestick right here, this is a rejection, but look at this candlestick. If it would have broke and closed underneath the previous wick, okay, that's a sign that the market wants to continue. But since it rejected, that's a rejection, and the overall thesis basically break and retest. We got this candlestick, which is a form of strength for the buyers. This candlestick basically a form of weakness for the sellers, since the previous the candlestick after did not close underneath it. Basically, in my head, I'm thinking, okay, this is my entry candlestick. I could have entered on this one right here, or I could have entered once it was breaking past this high for an extra confirmation. But at the end of the day, you know, I was very aggressive when it came down to this trade, and 3-minute time frame looked good as well. Didn't really base my trade off of that. Based my trade off of the 5-minute candlestick pin bar, and we have this right here. So that's how I took the trade. And since we're at all-time highs, I didn't know where I wanted to take the trade to, so I basically just aimed for 12 points. I know for a fact I can get 8 points on any given trade, but since this was such a good trade, I was like, you know what, let me aim for 12 points. Once I got 12 points, I got out. The market ended up continuing, but you know, that is what it is.